Okay, so finally getting around to making another video. Took a while, but here we are. The basis of the video is going to be about dividend investing. I feel like a lot of people are like afraid to invest, but everyone now gets told to invest, but I feel like nobody really knows where to start. But everyone feels like it would be almost like a gamble to invest in the stock market because you don't know what's going to go up, you don't know what's going to go down. But thankfully there is dividend investing, which I'm going to give like an intro guide. Okay, so basically what is a dividend? A dividend is essentially like a thank you for holding a stock. So basically a company would go ahead and make some profit, and then you would get a small percentage of their profits for holding their stock. So how much do you get paid for actually holding a dividend? Each dividend stock has something called the dividend yield. This is basically the percentage that the company is going to pay you for holding their stock. So example, you own a stock called SPHD. They pay a monthly dividend, and right now they have a 3.89 dividend yield. So what does that mean? So if you were to invest $1,000 into SPHD at a 3.89 dividend, you would get paid $38.90 across the entire year. And like I said, they do pay monthly, so that $38.90 would be broken up into 12 pieces. So you would be getting paid $3.25 every month for just holding the stock. You don't have to touch it. Not all stocks are dividend stocks. Some companies that prioritize growth won't offer a dividend. So an example of a growth company would be Tesla. They are more focused on getting their profits and putting it into research and development to grow the company even further for more profit. Also, companies like Procter & Gamble that sell things like toothpaste and things that people need to buy on a daily basis. So Procter & Gamble focuses more on dividends to reel in investors because they're not focused so much on growth. The thing that brings investors into Procter & Gamble is their dividend. Another question I get for dividend stocks is how often would you get paid? Every company that pays a dividend stock has a different payout schedule. So for example, some companies could choose to pay you out monthly or quarterly or semi-annually or even annually. It depends up to the company, so do your research before you actually invest in the company to see how often you'd be getting paid those dividends. Another question I see a lot is, do I pay taxes on dividends? And the answer is yes, you do pay taxes on dividends, but you only pay between 0 and 20% on those dividends. But that depends on your tax bracket. I know earlier in my example, I said you would, for $1,000 into SPHD, you would only be getting paid $3.25 a month. And that doesn't really sound like a lot. So why would you choose to dividend invest rather than any other type of investing that's out there? Dividend investing is very hands-off. So like saying you can buy into a company, and then since the game plan is to just hold it, you don't really have to worry about the price fluctuating, going up and down. If anything, if the price goes down, you'd want to buy more because you would still receive dividends even if the company's price does go down. Also, the thing that makes dividends so powerful, that giant snowball that keeps growing your money, is something called DRIP. DRIP is the dividend reinvestment plan. Basically, it's every time that you get paid a dividend, you immediately put it back into and buy the stock that you got paid from. So basically how this would work would be like this. So I'm going to continue using SPHD as my example. So every month you would be buying a little bit of SPHD, and every month you would be getting paid dividends by SPHD. Your money is making you more money, and that money is making you more money on top of that. So every dividend payout that you get is going to be bigger than the last. And to show that, I'll actually like even put up like a little picture somewhere up here to like show how strong of a tool that can be. Like your money today, $1,000 can grow up to, I don't know, I'll show it right here. We'll see how much it grows into. But $1,000 reinvesting $100 a month, I'll show how much that can grow in 10 years. Okay, so now like if you kind of get the idea of how dividends work, where would you even start? Like what companies would be the best to start dividend investing into? I mean, where you could look into is something called dividend kings. Dividend kings are basically companies that have paid out dividends for minimum 50 years straight, and they also have increased their dividends consecutively for 50 plus years. If I were to start anywhere, there could be a list that you can find on dividend.com. I'll show a little example here of some companies that I've found so far. Looking into dividend kings would probably be a good basis to start off your dividend investing. I need to relax for real. I'm all stressed out. God damn. Check that out. How tough is that? Remove. Okay, I do want to put out like a small word of caution if you are dividend investing. So you would think that, oh, like if you're doing your research, you would find a company that would pay 8% dividend yield, right? And in your head, you're thinking, wow, That's actually pretty good. That's a lot of money. And then it would make sense for someone who's just starting out to look into the dividend stocks that pay out the most, because who doesn't want more money, right? But I would say that the higher the dividend yield, like the bigger the red flag that would be. Definitely do your research if you are investing into dividend stocks. A company's overall financial health can be somewhat reflected into their dividend yield. So a company that pays out a really high dividend, but the company isn't really financially strong, could be something that is known as a dividend trap. Basically, these companies lure you in with this super high dividend because it's very enticing to investors to get more money for their initial investment, right? But I would be on the lookout for those, like, to be kind of, I know I said a higher dividend yield would be suspicious, but the typical dividend yield is typically around 2 to 5%. So anywhere within that range would be a solid dividend, especially if it's from a dividend king. Now I want to invest in dividends. Where do I even start? Like, where do I even buy these stocks? If you're a beginner, I know it's probably unpopular opinion, but I would start off with Robinhood. Robinhood walks you through the process of learning how to invest in dividends and other things. But definitely once you get base knowledge of how investing works and how stocks move and options and all that, I would definitely move over to a different platform, a different brokerage. I would say Robinhood is probably best for the very beginner investor. And then once you get more intermediate to advanced knowledge, I would definitely move on to something like Webull. Webull is just more intuitive. There's more tools to use. But like I said, if you're just starting out, Robinhood, like I said, unpopular opinion, but it definitely teaches you the ins and outs of not only dividend investing, but also options. It explains it. It's very straightforward. So yeah, not a bad idea. I wanted this to be like an intro guide to people who are kind of off put by the idea of investing, because you think, oh, you just throw in your money in the stock market and let's see where it goes. Hopefully it goes up, right? But dividend investing, like I said at the beginning, is very, I don't want to say passive, but it's definitely more hands off because you don't have to worry about the price fluctuation so much. It doesn't feel as satisfying to dividend invest in the beginning because you're only going to be getting paid like a couple dollars here and there, maybe other month. But there's definitely methods to speed that up, but that involves options. So I'm definitely going to put that in a more advanced video later on. Also, I made this list of dividends that if you were to buy all the dividends on the list, that they would make a schedule where you would get paid dividends every single week of the year. Yeah, so that's pretty much it. Like, if you got anything of value or learned anything new out of this video, please let me know. Like, leave a like on it, because these videos take me like, what, hours to record and edit, mostly because I'm shy. But yeah, please let me know if you have any other questions. Leave them down in the comments. Yeah, and if there's like any type of trend that I see or questions that are always being asked, I definitely want to make videos about them. So if you have questions, please let me know. But yeah, if anything, thanks for listening. Damn, I'm cringing these, bro. Man, I'm not this shy, I swear to God. But these make me feel some type of way. It's just something about like seeing myself in the camera. I don't know why I'm so shy doing the YouTube videos when I actually like streamed live on Twitch when I was a kid. So like, I don't know how that works. Mini shout out to Tami, like if you do see this video, like I am repurposing your room as a mini studio. So, but I did put your art back there. So I told you forever ago that people would appreciate your art. So I made sure to stick it in there just to say thank you. All right, I'm out.